This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services, member FINRA, and SIPC.
Good Sunday morning. This is Bud Hettinger. Next on News Radio 102.5 WFLA, the longest-running radio show in Central Florida, Dollars and Cents, with my good friend Joel Garris from Nelson Financial Planning. You can call him at the office this week at 407-629-6477 to schedule your free consultation to discuss your retirement plans. Or you can talk to him right now at 407-916-5400.
Well, good morning, ladies and gentlemen, and welcome to the program. Happy Memorial Day to you all out there. It is the 3-day weekend. Hopefully the weather's not too bad out there. The reason I say hopefully is in the interest of full disclosure, we actually taped this program on Thursday of this week. Taped it, well, for a couple of reasons. Number one, we're going over to the beach with the family over Memorial Day, and hopefully we don't get rained out too much. But the other reason is that we're joined by a special guest on the program. We're going to welcome Brad Rutan to the program. He is a managing director for Massachusetts Financial Services. MFS's claim to fame, and it's a pretty good claim to fame, is that they, in fact, invented the mutual fund. So they've been around since 1924, performing pretty consistently. Brad serves with them on working closely with the portfolio management teams and talks a lot around the country about the philosophy, the process, and the positioning of MFS. He joined MFS in 2006. Prior to that, he was with another mutual fund company that we know quite well, and that is Putnam Investments. He earned his bachelor's degree from the UVA of University of Virginia, and he holds a chartered financial analyst designation along with a Series 6, 7, and 63 license from the good folks at the Financial Industry Regulatory Authority, or FINRA. Welcome to the program, Brad. How are you this morning?
Hey, Joel, we're doing well. That was a pretty lengthy intro you gave there, but doing well. Good to be here. How was
UVA? Because that's on my oldest son's college wish list. Although the personal assessment is that may be a bit of a stretch for him to get into. But did you enjoy UVA?
I loved it. It's actually the only place I applied to. I loved it so much that I went down and visited it. Visited a couple other schools, but I knew the second I walked on campus that this is the place for me. I applied one place, got in, and that was it. So pretty easy application process for me and my parents.
Well, that is good. That's certainly that college process is certainly on everybody's mind. I think it was last week's show or maybe the week before we spent some time talking about how to tackle student loan debt, which is a major problem out there, particularly if you're going to UVA as an out-of-state student.
Yeah, definitely. It even has some implications in the investment world as far as asset-backed securities, which we don't have to get into today, but a lot of the loans backing up asset-backed securities, how secure are they? So that's something we've been looking into, but that'll be a show for another day, Joel.
that might be a little. We might be going way deep on that one. Unfortunately, we only got an hour, so
right.
I wanted to have you on the show today because I thought it would be an interesting conversation because we talk a lot about mutual funds being sort of the investment vehicle of choice that we recommend for our clients, and so I thought it would be interesting to have you on the program to talk a little bit about MFS's history a little bit, and kind of what your role is, a little bit more than what I just gave in the bio that the office sent me.
Right. Yeah, sounds good. As far as MFS, back in 1924, if you think about it, what people made in a month, as far as income goes, you couldn't even purchase one share of stock. The stock prices were so high relative to people's earnings, so pretty much Main Street was shut out from investing in stocks. It's just something that only rich people could do. We started a fund back then, a Massachusetts Investors Trust, where we pooled people's money. In fact, the first people that we pooled were people that worked in the whaling industry. But we pooled their money together so that we could then buy shares of companies, of stocks, and in doing so created the first mutual fund. Obviously, it's been a long history since then.
And it's been a good performing fund. We try not to plug specific funds, but we will give that one a plug of sorts. So fast forward to today, what's the typical day look like for a portfolio manager?
Yeah, I mean, what all of our portfolio managers were analysts at one point here at the firm, so we don't hire kind of your all-star PMs from other firms. You got to learn how to research companies first. So a big part of their day is still meeting with our analysts to better understand the companies that our analysts cover. Sit in on the sector team meetings, travel with them, go visit the CEO, or maybe when the CEOs come to visit us, sit in on those meetings. But I think one of the most important things is, a good chunk of our investors' pay is based on how well they work together with the other investors, the other analysts and PMs. So when we're looking at let's say a U.S. bank, we want to invest in a bank in the United States. Obviously, we're going to talk to the U.S. equity analysts that cover that stock and the fixed income analysts that cover their debt. That's obvious. But isn't it also important? Maybe that bank loans a lot of money to the energy sector. So shouldn't we talk to the energy analysts and kind of get a view on that sector and maybe those companies the bank is tied to? And since banks buy a lot of technology, they're the biggest buyer of technology in this country, shouldn't we talk to the technology team and kind of find out what's pricing going to be like in the next year, and is that going to affect the bank as far as their expenses? So it's that cross-collaboration. Don't just talk to the financial guys. Let's talk to energy and tech and see if we can build a holistic view of where that company's going.
And I'll tell you what, your analysts are all over the world. I remember 20 years ago when I made the transition from Washington, D.C. down here to join my father-in-law, Jack Nelson, and to join the firm, that my wife and I grabbed a backpack and wandered aimlessly around the world for a little bit. And one of the places that we wound up was in Singapore. And through a friend of a friend, we actually had dinner, and I forget the guy's name at the time, but he was your analyst over in Asia. We actually went out to dinner with him in Singapore 20 odd years ago. So you guys are certainly, these analysts are all over the place and really doing, kind of the on the ground work. How often are they visiting with these companies?
So we meet about 3,000 companies a year we meet with, and that's every year. So next year, and obviously some of those are repeat visits. But yeah, we have analysts in 9 different global offices, everywhere from Sao Paulo to Sydney to Singapore, as you mentioned, London, et cetera. And that's important because, again, let's go back to that bank situation. If we're looking at a U.S. bank, shouldn't we have someone in London comparing, well, is there a better option in London? Is there a bank in Europe or a bank in Asia that's a better investment opportunity? And should we bring all 3 of those areas together into one meeting and figure out what's the best bank to invest in today? And that's the beauty of having analysts all over the world.
certainly much better than just simply looking at whatever information's floating around out there on the internet and trying to decide whether a company is worth buying or not. We'll get more into that with Brad Rutan from MFS here on Dollars and Cents. This is Joel Garris, News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Welcome back to the program, ladies and gentlemen. Happy Memorial Day weekend. If you caught the intro portion of the program, you know that we actually are taping this on Thursday because we welcome a very special guest, Brad Rutan from MFS, Massachusetts Financial Services. For our clients, they've met you on, I think, 3 different occasions, right, Brad? Because you've come on down and chatted with our clients in a couple of the corporate events.
I think it's been 3 now that I've come down there. That's correct.
That's always we always appreciate it, and always good to share good information. And so we're glad you're able to join us this morning. We were talking a little bit before the break of those analysts that work with your portfolio managers on the different funds, and so tell me a little bit about kind of their thought process as to what goes into if they decide to sell a particular company or to buy a particular company. What goes into that thought process for their recommendations?
Yeah, so I mean, obviously the first thing is you got to meet with the company and find out, you know, what their deal is, and find out how much their CEO or CFO is lying. Because I don't know if you knew it, Joel, but company management doesn't always tell the truth. So it's our job to sit them in a room with equity analysts and fixed income analysts and anyone we can find, and just start poking holes and asking questions and seeing where's the hole in this beautiful story they painted about how much growth they're going to have over the next couple of years. And then we take all the information, we do our cash flow modeling and figure out how much they can make and where's the risks and how much do we want to pay for it. And then we set a target for where we want to buy it and where we want to sell it. And that will determine whether, you know, we buy more today or we start to trim it based on is the future growth priced into the stock today.
And is that probably the most important factor that you look at, is that future growth, or are there some other things that you look at as you're trying to make that final decision? You know, should I buy or should I sell? Should I stay or should I go?
Yeah, I think there's a song about that. You know, it for us as a growth manager, it is. So there's different styles, as you know, and I'm sure your clients know. There's value funds and deep value and growth. We're a growth manager, so we're looking for companies that can grow cross-cycle, not just grow when the economy is doing better, but across the entire business cycle. We want companies that can grow. So yeah, that's the main thing, is that cross-cycle growth we're looking for. There's qualities that drive that cross-cycle growth, but in the end, that's what we're looking for.
Well, and I guess that would go to the point of it's really hard to predict the overall economy on a consistent basis. So based upon how you guys are doing it, as with most actively managed funds, you're really looking at it on a really a company by company basis. How much does sort of the overall economy or the overall sort of state of a sector come into that conversation?
Well, it might be hard to predict the economy here, Joel, but I don't know if you knew it, but China's been predicting their economy pretty well. They'll say they will grow at 7.862, and they grow at exactly 7.862. It's absolutely amazing that they can do that. But yeah, it's difficult. But to be honest, the overall economy doesn't matter that much when it comes to investing. I think that surprises people. I think people tie, well, GDP to stock returns. There's really no correlation between those two. What drives stock prices is cash flows, profits, revenues, not GDP. So we want to invest in companies that can grow regardless if GDP growth is 2 or 4, regardless if he won or she won. So those things really matter less. Tomorrow, what happens in the news will have an effect on a stock price. But long term, that stuff doesn't matter. It's the business model, it's the revenues and the cash flows that matter.
Well, and that's such an important story, Brad, and one that we emphasize to our clients all the time. The role of being consistent, being diversified. There's always going to be times where the market doesn't really do what you think it's going to do in the short term. A great example of that is this earnings season, right, that just concluded. Right. I mean, you got companies earning average earnings growth of over 25%, and you get a big old yawn from the market.
Yeah, absolutely, but don't, and I think you understand this, and I can tell from your comments, that will catch up. The market will catch up with that. The market gets distracted like a 2-year-old, and can't focus on what's important for too long. Once it sees something shiny, like my kids, they're ignoring you and looking at the shiny object outside the window. The market does the same thing. It gets distracted with politics and North Korea and the Middle East, and that will happen for a day, a week, maybe a quarter, but over the long term, that earnings growth will bleed through to the valuation and stock prices. So if anything, isn't now a time to buy if the market isn't recognizing that earnings growth yet? To us as investment managers, that's a time maybe we should load up, add a little more to those stocks that are being ignored by the market.
Yeah, that's certainly a good point, because that earnings season that just concluded really was a pretty strong one. How old are your kids now, by the way?
Yeah, so I don't have 2-year-olds anymore. We have 4-year-olds. We have twin boy-girl 4-year-olds, and then we have a 6-year-old daughter who turns 7 next year.
So that is a busy house. So later today, because as I mentioned, we're taping this on Thursday. So later today, my youngest graduates 8th grade. So next year I will have three in high school, and so that'll be a whole nother adventure for sure. That
also means you'll have 3 in college at some point too, Joel.
Well, that is very true, and the big day that obviously the investment industry likes to market is May 29th, 5/29, to remind people that you better start saving somehow for college, and obviously 529s are a great option for that.
Day one, when my kids were born, we opened up one for each kid, and I can't stress enough how great that is as an investment option to help you pay for college.
It really is, to be able to grow tax-free, and when you use it, it's growing tax-deferred, and then when you use it for educational purposes, it's tax-free. And based upon the 2018 tax changes, the ability to use it even for private high school and things like that is a bit more expanded as well. Of course, the biggest difference between having 4-year-olds and 6-year-olds is that with a 17, a 15, and a 14-year-old, we were able to stay up last night and watch the Celtics.
Right. Great game.
Hopefully the next one goes equally as well. Yes, we would like somebody different than the usual suspects in the NBA Finals. That's for sure.
That's right. I mean, I think as a Boston fan, it was actually refreshing to see the Eagles win. I mean, obviously we would like the Patriots to win, but it's nice to have some new blood win. So I think there'll be a lot of support if the Celtics get into the finals. Of Granted, that's David versus Goliath type scenario.
That is true, but those young guys for the Celtics really are showing up pretty well. Yeah, that's
fun to watch.
You've done Danny Ainge and the group up there that manages the Celtics really has done a very good job at assembling talent, particularly when you lost your two best players.
That's it. Tough to do.
Yep. Good stuff indeed. Well, when we get back, we're going to continue the conversation with Brad Rutan from MFS. We're going to try and get a little bit deeper into some of the sectors that are out there. If there's some particular sectors that they see some interesting opportunities in, we'd love for you to share that, Brad, after the break here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning on News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Welcome back to the program, ladies and gentlemen. Dollars and Cents. This is your host, Joel Garris of Nelson Financial Planning on News Radio 102.5 WFLA. Joined today, a special guest, Brad Rutan from MFS. He is, stands for Massachusetts Financial Services. He is a managing director for them and works closely with the portfolio management teams and travels the country, right, Brad? Talking about the strategy and the process that an actively managed investment management company does.
Yep, travel almost all 50 states, Canada, Europe, and a little South America, too.
Yeah, no, all over. You must have some good frequent flyer miles built up.
Got some of those, and a wife that's not too happy with that travel schedule, given the 3 young kids at home.
Yeah, I can imagine. But every now and then, it's always good to get away and take a break.
That's right.
So before the break, we were talking a little bit about the analysts. Now your analysts do kind of specialize in various sectors. So you have analysts that are energy focused, analysts that are technology focused, analysts that are financial industry. Is there a particular sector that everybody's kind of talking about and excited about? We hear a lot about automated vehicles and technology and things like that. But any views on sectors that are kind of getting a little bit more conversation on your end?
Yeah, and I think the important thing is you need to find, there's a lot of talk about certain sectors out there, but are they making money? So just because it's a hot item like autonomous vehicles, if the company's not making money, then all that is a hot item. So the areas that we're looking at now is obviously the cloud computing, where you no longer have to have all that hardware and software on site. You can get rid of it and pay a cloud provider to do your data storage, your processing, or your software off-site. So think of how much money that saves a company and how much easier it is to scale up and scale down if they grow or shrink in size. The cloud's a big area. Another area is gaming. Esports or e-gaming, which a lot of people don't understand. Yeah. That's, I'm sure you've heard of it.
Oh, yeah, 17, 15, and 14-year-old. Yeah, I know what e-gaming is.
Right, and you definitely you're in the mix of it. But this is a massive global trend where about 250 million people are participating in this. So, as a dad, I don't think I want my kids to get into it anytime soon. Maybe wait till they're 14, 15, 17. But as an investor, there's tremendous opportunity to monetize this global trend in e-gaming.
Well, and I think you've shared a statistic before about something how they were having a big e-gaming competition out at the Forum in Los Angeles or something, or I forget what that.
Yeah, they sold out. It was actually the opening weekend of the NFL last year, which as a football fan, that's a big weekend.
Sure.
But the number one most searched ticket on StubHub for that weekend wasn't for a Patriots game or a Dolphins game or a Bucks game. It was for an e-gaming event being held out in L.A. at the Staples Center that sold out in 8 minutes. to watch other people play video games. That's essentially what that venue did. So amazing. It's a very big growing area.
Yeah, and you know what's fascinating about these games that and I'm sit around and on occasion I'll play them, but I don't know what I'm doing. But the graphics and the story in these games, it really is almost a movie quality and a movie script almost interwoven, or a story interwoven in the game. You're no longer chasing around little dots on a screen, are you?
No, I mean, when I grew up, I think Galaxy was probably the most advanced game, but even Pitfall was, and Donkey Kong. It was just nothing like you see today. So the chip makers have really caused a massive advancement in graphics, and again, a reason why this is a growing industry. Not to mention, when you and I played, Joel, maybe back when we were growing up, we had to buy cartridges.
Sure.
Right? Your mom probably drove you down to Toys R Us or KB Toys, and you bought the cartridge and you brought it home. 35% of games are downloaded today.
Yeah.
Now, think about what that does. The cost it saves these game companies. No more discs, no more packaging, no more shipping. So tremendous opportunity to make money there.
Well, and it's instant. And talk about instantaneous gratification, and we ran into that issue at our house. I think it was the NBA 2K game where they will give you can get better players, and all of a sudden I'm looking at a email account that I kind of use for signing up things with, and so it's not one that floods my office email, and I'm looking at all these purchases. I'm like, whoa, what is all this stuff? I mean, you talk about making money. I mean, it's just a click of a button, $15 here, $15 there. Before you know it, we're having a serious conversation with the boys and shutting that down pretty quick.
And now you understand why we own these companies. You were a line item in one of these companies' income statements that said Joel accounts right on it for the money your kids are contributing. So thank you.
Yeah, well, yes. You would be surprised at how it adds up until I caught on to it, and then we had to shut that down. That's for sure.
They call it the Garris effect.
Indeed. Well, one of the things that we're going to continue to hear more and more of, I think, certainly this year, is that it's an election year, right? Midterm election year. Any comments on the midterm elections, and we're starting to see some data out there about midterm elections, and if you look at some of the other midterm election years, first of all, it's certainly pretty normal for at least one part of Congress to flip from the prevailing party to the next party. Certainly, if you look at the last four midterm election years, that has happened. Any thoughts on midterm elections and kind of what the implications might be for that?
Yeah, and I'm sure there's some data out there that says if Congress flips this way, the stock market does this return. If Congress flips that way, the stock market does that. You could also say if a righty pitcher starts the third game of the World Series, the stock market does this. I mean, is it correlation or is it causality? So to be honest, we don't care. We just don't care from a political perspective. As a dad and as an American, of course I care. As an investor, we just don't care about politics because, again, we're investing for 5-10 years. And if your company needs Congress to be this party or that party to do well, if your stock needs him to win or her to win in the presidential election to do well, then you're not a stock we want to invest in to begin with. We want to invest in stocks that can do well if he won or she won. So, again, it's not something that matters much. Overseas, in Latin America, there are some big elections going on that'll have implications for investments down there.
Sure. Depending upon which country. Another kind of segue off of that, Brad, is we're hearing more and more about social investing or socially responsible investing, and our view on that is that it really is only about what what the earnings are and how a business is doing, and sort of let the market sort of speak for the social part. What's your view? What's your view on that? If you can get that in before the break.
Yeah, definitely. I mean, there's two ways to do this. You can screen to start with, where you eliminate any stock that has a social problem. We prefer to just incorporate it into our research. So if there's a social problem or an environmental problem, maybe we lower the target price in that way. But I think that's a better way to invest than just screen out anything that might have a social governance or environmental risk.
Sure, because then you get into where do you fall on that slope, right? I mean, and we'll talk more about this when we get back from the break here on Dollars and Cents. This is Joel Garris on News Radio 102.5 WFLA.
This is Bud Hedinger. You can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Welcome back to the program, ladies and gentlemen. Happy Memorial Day weekend to you all. We are joined this morning. Actually, we're taping on Thursday. With a very special guest, Brad Rutan from MFS, Massachusetts Financial Services. And welcome back to the program. Brad, before the break, that last break, we were talking a little bit about social investing and how whether that comes into the mix or not. And you had some comments on perhaps that changes the target price for what you might be looking at. Yeah,
so let's say that there's an environmental issue, maybe we don't want to pay 20 times for that company, 20 times earnings. Maybe we'll only pay 16 times. So we'll adjust what we'll pay for it or our conviction in the company based on the incorporation of are there any ESG risks. And we think that's a better solution than just avoiding any company that might have, every company has some level of environmental, social, or governance risk, I would imagine.
Sure. That would make sense. Now, MFS, Massachusetts Financial Services, is an actively managed investment manager. Why don't you spend a few minutes sort of comparing that to sort of the other options that are out there, ETFs and indexes, and then we'll segue into some of the research that you all have done and some of the analysis that you have done, sort of comparing those options that investors have out there today.
Yeah, there's kind of two ways to invest. A passive or ETF model is backwards looing. You invest in all 500 stocks in the S&P 500, or you invest in 1,000 biggest companies in the U.S. But it doesn't change from day to day. It stays the same. It's passive. Whereas an active manager, we're forward-looking. We're looking out into the future to see what could happen with these companies, what could change, what do we want to invest in, and we actively manage the securities in the funds to best capture what we feel will happen in the future.
Unfortunately, the media and to a large part the financial and investment management industry has not helped themselves. Obviously, at MFS, your history goes back to 1924, but there's a lot of investment management companies out there that have not been around that long, and the vast majority of actively managed funds out there really are not particularly great in terms of their track record. That's right. Why we like MFS along with some other investment management companies because of that track record. You got a number of funds that have well in excess of 20-year plus track records, and there's a lot to be said for that as a key differentiator between some of the newer stuff out there that just doesn't hold up if you're only looking at a 3 or 5 year period of time.
Right. Yeah, it's and I think, listen, ETFs aren't bad, passive isn't bad, but to your point, the media has just broadcast that they're better because they're cheaper. ETFs are generally cheaper because you don't have to pay managers as much to research what's going on in the future or what trends we're looking at. But last time I checked, cheaper is not always better, is it, Joel? I mean, I'm sure you could find a cheap doctor to do your heart surgery. Doesn't mean it's better. So I think that broad base brush of, well, they're cheaper, so that they have to be better investments has really been misinterpreted in the media and in our industry as well.
Well, and at the end of the day, sure. Well, then that is true because the financial services industry has done a great job in Washington pushing this. As long as it's cheaper, that's all that matters. The reality is that none of those are ever going to beat an index. An ETF or an index is always, there's not a single one out there that, in fact, will beat the index because they all have internal expenses. So it's kind of interesting, the positioning, and then they've been successful at the lobbying effort in terms of getting people to focus only on costs when the reality is it's really about results. And you guys have also done some additional research that really says that there's some hidden risk in some of these ETFs and passive funds in terms of liquidity and things like that, I think.
Yeah, I mean, the past 5 or 6 years, the majority of money in the market has gone to these ETF portfolios, and that's created some serious problems. Because you take an S&P 500 ETF. When money goes into that ETF, let's say $1 billion goes into it over a month, they have to allocate that money to all 500 securities. Well, there's a chance that not all 500 are good investments today. There's 28 oil and gas companies in the S&P 500. I'm not sure there's 28 good oil and gas companies in the United States. Wouldn't you rather own 2 or 3 of them? But what's happened is all this money flowing into these ETFs has pushed the prices up of all stocks the last 5 or 6 years, even though some of them didn't deserve to go up. And we feel that's a risk in the future, that when we have a sell-off, that those companies that have done well unwarranted are going to fall quicker than other companies in the market.
Yeah, it's funny, at its very core, it really is an inefficient distribution of capital when you have to give, when everybody gets their share. There's clearly winners and losers.
It's kind of like socialism and versus capitalism, where instead of allocating resources to the companies that have the best products and the best people, you just kind of spread the wealth across every company, and that's not what this country was built on.
No, not at all. I mean, I think there's some real opportunities out there to make those differentiators across the board for sure, because there's clearly good companies versus bad companies, and especially if you guys are sitting across the table talking to these companies on a regular basis, I'm sure you can tell pretty quickly when someone is not exactly telling a good story, if you will.
Yeah, we can sniff out a good lie pretty well.
Yeah, I would have, and that's really the core of the approach. It is to really not just look at the information in black and white, but be able do that additional investigation and actually to ask the questions directly. And you can tell a lot when you're asking those questions directly from the heads of companies for sure. So, well, yeah, Brad, you go ahead.
I was just saying we don't buy a single bit of research from the street. We develop it all ourselves, and to your point, that allows you to get at some good insights about what you should own and not own.
Well, that's a great point. So, yeah, that is certainly very, very true. A whole different perspective than the music that the street plays on its carnival ride from time to time. Well, Brad, we certainly appreciate you joining us this morning. Great conversation, and hopefully our listeners appreciate it as well. Some good information about the nuts and bolts of how a mutual fund and an actively managed fund, in fact, does what it does, and how that's sort of different than the other options that are out there. So Brad, we'll look forward to having you in Orlando for one of our upcoming client meetings. Hopefully you can join us for one coming up. We certainly appreciate that, and certainly appreciate you joining us on the program this morning.
Look forward to seeing you again, Joel. Take care.
All right, sounds good, Brad, and go Celtics.
That's it.
That's it, indeed. Well, I hope you all enjoy the rest of the weekend. Thank you all so much for joining us. We will be back next week here on the program. This is Dollars and Cents with Joel Garris of Nelson Financial Planning. You'll see the News Radio 102.5 WFLA.
This is Bud Hettinger, and you've been listening to Dollars and Cents with Joel Garris of Nelson Financial Planning. If you missed any part of today's show or want to listen to it again, check out the radio show at www.nelsonfinancialplanning.com or connect with them on Facebook or Twitter. Be sure to call Joel this week at 407-629-6477 to schedule your free consultation to discuss your retirement plan.